Hey, so you might remember me from the early days of Tesla YouTube, given that I bought a Model X in 2017. It was one of the first to make full self-driving videos on YouTube and at least review my positive experience with the product. Now, I'm not trying to take credit for anything, but I've been a very big and loyal fan of Tesla. Now, I have had my ups and downs in terms of when's the valuation a little rich and, when is it low? Now, what I'd like to talk about though in this video is the prospect that a Tesla might go bankrupt. I see these videos a lot, and I'm actually, maybe I shouldn't say I'm surprised, but I honestly am. I feel a little surprised by how much negative sentiment there has been around Elon Musk and his participation with the Trump administration. Fundraising for Trump was one thing, but now working under, basically running Doge and working as a federal employee, an unpaid federal employee, has clearly pushed buttons further than a lot of people are satisfied with. Now, it's unclear whether these comments are just bot armies online, but let's put it this way. The viewership for, Tesla's going bankrupt and hate on Elon and commentary about hate on Elon is at the highest levels I have ever seen. And it is very, very negative. So what I'd like to do is just look at the financials of Tesla and decide, is Tesla a company that could end up going bankrupt during the Trump administration? What do their financials actually look like? And what are the odds that, your investment in Tesla could basically go to zero? Vice versa, is Elon's involvement with politics potentially going to create one of the greatest buying opportunities ever in Tesla and something that you won't want to miss? So let's talk about that. I think the easiest thing to do is let's just start with their balance sheet and understand a little bit of what kind of capital that they actually, what they're working with, right? And once we understand what assets they have, then we might get a good idea in terms of, okay, all right, got it. These are the assets they have. Here's how much they're burning. Here's what their expansionary plans are. What do we think? Can they go bankrupt? Okay, so with that, let's get into the financials. So we'll jump on over here. And let's take a peek at what we got. So this is their balance sheet for the year ending just about 6 weeks ago now. We can see that they've got about $36 billion of cash and short-term equivalents right here. We've even got some accounts receivable, $4 billion, inventories of about 12, prepaid expenses. Let's see what we've got in the liability sector. Here we've got $22 billion of liabilities. So these are bills on the desk of Elon, so to speak, that have to be paid. And then we've got some deferred revs and some other items here. So if we just net these out, this is very conservative, by the way, since they still have an extra $16 billion of receivables and inventory here. That inventory still has to be processed. You still have to pay employees to put it together or Optimus robots, whatever. Accounts receivable I see as like a little cushion, a little safety net. I usually don't like adding it in. You could discount it by 50% if you wanted to. But either way, let's take $36 billion and let's subtract it from the current liabilities. So we got about $14 billion of free cash right now. That's actually really good. For a cash flowing business, Tesla has enough free cash right now, excluding their long-term liabilities, which aren't due this year. Really, we don't have to worry about these right now other than the debt service on these long-term liabilities, just the current portions of them. You could add this extra $2.4 billion in here. Usually I don't include leases, but hey, include it. It leaves them about $12 billion, say, 11.5. It's enough to actually build a whole nother gigafactory if you wanted to. Now, we don't need to. We are building out the semi-factory. At least the framework has been built out. Personally, I think that is a little bit more, I don't know that they're actually ready to manufacture yet. I think some of that is sort of like signaling, like, look, we're expanding, which is fine. I'm happy to see it finally get built out. I'm very happy about that because I do think autonomous trucking has a very significant future in our lifetimes. I don't know how soon it'll come, but I think that's money well spent. There is a lot of demand for that in the trucking space. That said, if we have any more kids, I'm gonna need a semi-truck for my family. We have 7 kids, in case you didn't catch the latest update there. But anyway, we're not going to build a Giga Mexico. It's just not going to happen right now with the trade wars that are going on. And frankly, we don't really need more supply of Teslas. mostly because it seems like demand has roughly matched supply. It doesn't seem like there's this oversupply of inventory where they're massively discounting or where they're freaking out or whatever. But it does seem like we don't have a need for more capacity right now. So these ideas that Musk is talking with Modi for India or visiting Taiwan or all these other areas, they create this feeling of like, oh, Musk might build a factory there. He's been saying that for years. Yes, eventually there should be a gigafactory on every continent, and we'll get there in the longer term, but not when interest rates are as high as they are. And right now, it doesn't look like interest rates are going to come down anytime soon. Now, I actually believe that creates a short-term buying opportunity for interest rate sensitives. That actually includes real estate. Like, I don't think we have a real estate recession on the horizon. We might have a layoff recession on the horizon, but I don't think we have a real estate recession on the horizon, which actually is fascinating because it means you now have a unique opportunity to increase your exposure to real estate assets. And it's entirely possible as rates come down, we expect the valuations to then become even more unaffordable because prices might go up. That's my take. That's why I kind of think now is an interesting time to buy real estate as rates are high. And that's what we're doing. But anyway, as far as Tesla, I actually think Tesla has a lot of hope regarding Optimus and FSD priced in, which I don't think will come to fruition as quickly as markets think. And so I think when you combine the sales impact of Musk and a delayed Optimus and FSD future, there'll be a really big buying opportunity for Tesla. The question is just, will Elon's antics lead to share depression or will it lead to company bankruptcy? So if we have $11.5 billion of cash, and this is a company that's not actually burning any cash. You know, if we go to our free cash flow statement, we are cash flow positive, right? So we've got net cash provided by operating activities. They basically double their cash on hand. However, if we take out the investments they're making into new capital expenditures, we're growing the cash pile by about $2.5 to $3 billion. We can see that right here, net cash provided by operating activities, and then we're going to discount out some of these capital expenditures. Now, this isn't the cleanest way to do it because, yes, accounts payable will show up here in the cash flow statement as well when they pay these items. So keep that in mind. That'll make some adjustments. So some argue that's double counting, but I like to be conservative. I look at this as it's a company that's got about $12 billion in cash, and they're adding to that pile, call it $2 billion a year. That's the status quo right now. So now let's make an argument that Tesla vehicle deliveries don't stay flat. They actually decline 10%. So let's go to our net income and see what the... you know what? Our G&A might not change that much. So let's actually just assume a 10% decline in automotive sales. We could just go total revenues over here. So let's take $10 billion off at margin. Well, what's margin? Margin right now is to the net, go gross profit again because of the OpEx over here. We've got gross profit of 17.4. I've got total revenues. Yes, this does include some tax credits, which could get damaged by Trump. Although I don't think Trump is going to hit those manufacturing tax credits because he wants made in America, right? But he might get rid of some of the subsidies, which could reduce buyer demand. So we're at a 17.8% margin for the year. If we dropped sales by 10%, we would only be shaving off about $1.7 billion, which actually means we're still cash flow positive. So now if I double that and I take out $3.5 billion, well, now I lose $1.5 billion a year, but I have 12. So if I take 12 divided by 1.5, I actually have 8 years of funding runway with just the cash they have available and a 20% decline in sales. So 8 years is going to get you through this next bull cycle, which I don't know how close to the top we are in it. It's going to get you through the next recession. It'll get you pretty far. Now, if you had a 50% decline in sales, right? Well, okay, now you're going to have layoffs, so some of your OpEx is going to go down, your margin might get hit a little bit, a lot more things can happen. But a 50% decline in sales, I'll just keep the same approximate margin, that's going to cost $9 billion. If that happened, they would still be sitting on $3 billion. Now, I also think that Tesla, if it were in those sort of dire straits where sales collapsed 50% for all their revenues, right? That includes energy, mega packs, cars, a 50% decline. They'd still have $3 billion left. Given that they're a Mag 7 and they're an over $1 trillion company, let's put it this way, they're going to be able to raise more money. People will offer them convertible bonds, which is a very, very common strategy, mind you. I'll give you an example of a convertible bond that Tesla did. Tesla convertible bonds, I believe it was 2014. And yeah, here it is, the end of Tesla's convertible bond era. They can actually just go back to this. But in March of 2021, convertible bonds Tesla issued back in 2014 will convert at a more than 800% gain. So now what's remarkable about this is they issued $600 million in 2013, $2 billion in 2014, $850 million in 2017, an additional 1.6 in 2019. So they were constantly raising convertibles, and they're doing that because they're a capital intensive business, right? These are 7-year convertibles, and they had a coupon of just 1.25%. Some of them, the 5 years in 2014, had a convertible as low as just 0.25%, which is kind of remarkable because people weren't really investing in it for the yield. The cool thing about a convertible is it gives you preference over common shareholders if the company goes into bankruptcy. So they get paid back first, they get their debt paid back. But a convertible has the option of converting into shares, usually at higher share prices, and boom, you get the upside with downside protection. It's kind of cool. It's actually, we looked at Tesla to do that with HouseHack. So think about that for a moment. With HouseHack, we offer a 5% coupon. Right now, it's to accredited investors over at househack.com, but we're releasing the non-accredited round soon, and we're just gonna dump money into real estate, basically. If you have questions, you can always email us at ir@househack.com. But anyway, 5% coupon, even for the non-accredited, converts at the current valuation, in a few years. So you don't actually need to see the company go up in valuation more than like a penny, and then you could convert to shares in the future. But it gives you that downside protection and a 5% yield per year, right? Which is kind of cool. And really what we did is we copied the Tesla model, except because we're collecting rent and we can pay out 5%, we're paying out 5%. So it's kind of cool. Anyway, that's just a little bit of a comparison over here. But the reason I mention that is because capital intensive businesses that build factories or buy real estate, similarity there, they have the capacity to raise money. And then they can use that raised money to diversify, to continue their business operations, to get through great times, to get through bad times, whatever they need to do. And then that could convert in the future. And like they did over here, rewarding investors with more than the 840% return, they give people an opportunity to have downside protection and a yield and upside, which is kind of cool. So this is an option that they have on the table to raise money. This doesn't even consider that they could also just straight up sell shares. So there are a lot of things they could do to get by, but really, if they could get through a 50% sales decline, there's basically no chance Tesla's going bankrupt because sales aren't going to decline 50%. These are the best EVs that exist. They're great vehicles. Do I wish they came out with a lower cost car? Of course. Do I think they're overly optimistic on the timeframes on Optimus and FSD? Absolutely. Do I wish they had Apple CarPlay? And is that why maybe Elon Musk retweeted Tim Cook saying we have a new partner coming into the family or whatever? I think so. Whole Mars thinks no. Fine. Everybody's going to have their different opinion. But do I think Tesla's going to go bankrupt? No. I just think there's going to be some sales disappointment, not only globally, but also in the United States with tariffs and high rates for longer. I think the next year to two will probably be more challenging at getting some of these things ramped. And so I see them as sort of like nibble opportunities, buy the dip opportunities, increase exposure opportunities. And I think there will be opportunities to buy cheaper. How much cheaper? We don't know. We have seen that stocks can run really far past a fundamental valuation. Like one of my favorites, my OGs of artificial intelligence, Palantir, which we've been reviewing in the course member live stream for years and saying these people have a crazy good balance sheet and amazing margins. Well, their valuation is kooky now, and their growth isn't that high to justify their valuation. But that's okay. Markets can go through these weird times, and it's sort of like Warren Buffett says. Imagine you're getting ready to swing a bat, and people are pitching at you. You want to buy Tesla at 400? Nah, bro. You want to buy Tesla at 500? Nah, bro. You want to buy Tesla at 300? Nah, bro. You want to buy Tesla at 200? Hell yeah. You want to buy Tesla at 150? Back up the trunk, right? It was just an example. That's sort of Warren Buffett's impression. I think that's why he sits on cash so much, because he sort of waits for blood in the street and panic. And we're not in that sort of case right now. But the whole point of this video is to say, even if we were in that case now because of Elon's, antics, or call it whatever you want, we could talk separately about Doge, and now Doge is getting involved in the Internal Revenue Service. Doge officers have showed up to the IRS. This is like entertaining. I mean, this is like a drama show. It's pretty incredible. We talk about this every morning in the 1.5 hour live stream we do every single morning, including weekends now in the course member live streams. You get lifetime access to those over at meetkevin.com. But this is fascinating. I do not see a chance of a Tesla going bankrupt. You would have to have a foreign EV maker and competitor come in and basically destroy Tesla. And Trump is just never going to let it happen. We have too protectionist of a government. And so we're not going to see that. We're not going to see a homegrown like a Nikola or a Lucid takeover. Nikola's about Bankrupt. Honestly, even if you're holding shares now and you're like, okay, so like, do I sell and rebuy? Look, not personalized financial advice. I'll just be straight. I don't think it's necessary to try to be perfect with timing. It leads to too much of a likelihood of making mistakes. My point is, maybe just keep some money for those dip days. We dipped down to 318, like I said would happen in the Alpha report. We bounced off that so freaking hard. We bounced right up to 355. Last 2 days in a row were great. 2.5 yesterday and 5.7% today. Really good. And the market's just overall very optimistic because tariffs are kind of coming on slowly. They're a negotiation point. The economy keeps chugging along. So far, layoffs aren't showing up in the jobs report. I mean, I don't know if Bitcoin's trying to tell us something, but that's all like anybody's guess at this point. But as far as Tesla, I don't see it going bankrupt. Obviously, I'll let you know if anything changes. I can't give you personalized financial advice, but I hope this is helpful for you and sort of my opinion of where we stand. The margins are too good. And even though, battery margins are declining for their energy business, the more battery margins decline for their energy business, the more competitive the batteries become for their car business, right? And the cheaper it is for them to sell cars with batteries. So anyway, optimistic, long-term, short-term, hey, anything can happen. It doesn't take much of a shock. Anyway, thank you so much for being here. Really appreciate you. I'm working on my best to bring in as much content as possible. We'll see you all soon. Thanks so much, folks. Goodbye and good luck out there. Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.